begin with an earnings alert on FedEx, and it's not a good one. Shares dropping after hours. FedEx stock down again, missing on both earnings and revenues. Let's get right back to Eric Chemi, who is at CNBC HQ, with more on the FedEx flop. Eric.
That's right, Brian. It was a disappointing quarter for FedEx. CEO Fred Smith acknowledged in the release that the company's fiscal 2020 is, quote, a year of continued significant challenges and changes. The company missed on the top and bottom lines, citing weak global economic conditions, increased FedEx ground costs, the loss of business from Amazon, a shift to lower yielding services, a more competitive pricing environment, and a late holiday shopping season. Looking ahead, the company is reducing its guidance to reflect lower than expected revenue and higher than expected expenses. FedEx is also implementing reductions to its global express air network and restricting hiring, all to help improve productivity and better match capacity with demand. For example, FedEx is eliminating many of its international flights to reflect reduced global air freight demand. The after-hours move now means FedEx is negative for 2019. Investors will have their chance to hear from Fred Smith and the rest of the executive team on the conference call in about 30 minutes. Brian, back to you.
All right, Eric Chemi. Okay, guys, let's trade this. And we were kind of making some comments, Guy Adami, about FedEx going into that because the company's not doing well. I mean, the stock's down, 10% over the past year. UPS is up 24%. I mean, the gap widens. What is wrong with FedEx?
Well, you could say it's operationally. You could say maybe some heads. Maybe there should be some changes in the C-suite. I don't know, but I'll tell you this. They lowered guidance a while ago, and they lowered guidance to $11 to $13 for full year 2020. They just lowered guidance again down to 10.25 to 11.5. I mean, you could drive
they have no visibility
clue
into
whatsoever.
their business.
So number one, stop giving guidance because it's clearly not helping their cause. Operating margins in their business continue to go the wrong way. Huge EPS miss, And we talked about this back in October when Bernstein lowered their price target. We said when the stock was trading 133, they're late to the game. The stock's going to rally, but they're going to wind up being right. We said that last night. 151 is their price target. I guarantee the stock is probably trading there now.
Yes. Well, I'm sadly long FedEx, and last time we talked about
still hanging on.
Well, I always want to hear the call. That last time we were talking about trades at a discount, and it should. And it's very frustrating to hear why they missed. They talk about weak global demand. They talk about the short selling season because of the way Christmas falls. They talk about Amazon. None of those are new. None of those are surprises, and yet they're citing.
Yeah, they're shocked by the calendar.
Yeah, right.
Nobody last year looked at 2019 and said, "Oh my gosh, right. Thanksgiving and Christmas are close." Somebody call the CEO.
So that's very frustrating. You talk about changes in the C-suite. They've had ones that they haven't. They tried to get some succession there, and it didn't work out. So that's frustrating as well. I mean, the bar was low going in, and it hit them in the face. And this
how much
really
longer, Karen, you holding on?
Unless they see something very different on the call, I gotta throw in the towel.
Really? So that's interesting because I'm someone that still has a lot of faith in Fred Smith. Certainly, if you'd asked me 4 quarters ago, I'd tell you he's one of the best in the business in any C-suite. And changes in the C-suite here that would involve him, I think, would be massive. But what's very disappointing, how can this company not have visibility into its business? I realize that there's a global trade war. It's not what I'm hearing out of UPS. Matching capacity with demand, hey, that's what UPS has been doing. UPS is the one that's been cutting CapEx. So this is very disturbing. Trough multiple. I've been saying that for 3 quarters, so I'm very wrong on that. This is frustrating. And this is a stock that also, as we want to believe in the rest of the industrial charge forward and the transports, which are giving you some late cycle oomph, this is the stock that you wanted to see, whether it's on the charts getting above that 200. It had been basing and getting there. This is a big disappointment. And the fact that they missed on the top line, the bottom line, and said that they can't tell you about their business is probably as disappointing as it's been for the last 3 quarters.
Yeah, I would just say that it's also worth broadening this thing out. At one point today, Navistar, which makes trucks, sells to UPS, sells to Caterpillar, was down 10% on their fiscal 2020 outlook. So when you think about this, yeah, there's a lot of things that are very company specific here. I don't think Fred Smith is the problem. I don't think, so let's take this, separate it from the trade war situation and say that maybe there are some other things going on as far as global demand for these sorts of services. I think that's
already priced. It should have been.
Well, it is priced in, but then you look at UPS, which is also trading at about 15 times. So you guys were talking about UPS or FedEx trading at a discount to its peers and to the market. Yeah. This thing's going lower. This traded below 140 back in September, October, the last time that they had guided down. Had this, 25% bounce from its trough down there. So 150, big level on the chart. I think you probably see this thing kind of retest, but there's not anything coming in this.
Well, again, Guy, because FedEx is one of the transports, and I think to Dan's point, broadening it out, is FedEx a FedEx problem?
Yes.
Is FedEx a global economy problem? Because people look to the transports to sort of extrapolate out where the entire market's going to go.
I think FedEx, I think and I know the answer to questions like that are typically both. However, I think it's 85% a FedEx problem. I think a lot of this is self-induced. Maybe a lot of it was unavoidable. I don't know. But I think a lot of it is FedEx specific. I'm glad Dan, though, brought up Navistar. I mean, a huge truck maker. This is a stock that with the S&P at all-time highs effectively today, this is a stock that topped out around $45 in early 2018, and now it's a $27 stock having bounced. So, there are a lot of warning signs that we try to bring forth each night. And I don't need any help looking foolish. I do it well on my own, but the market's done that. Well, it's true, but the market's done that for me. The market has a way of making you look really dumb in the face of what has been extraordinarily disappointing data out there, in my opinion.
Let's throw up a 5-year chart of FedEx if we can, guys, because let's not forget, and to your point on Navistar, Karen, this was a $275 stock not even 2 years ago. The stock is falling like an internet name or something, with no base. All the technical levels have been breached. It's lost $110 in 20 months.
Yeah, I mean, TNT, that was where it sort of all started to go awry. That was just ended up being a terrible acquisition.
The deal that they made for the private delivery company.
Right.
But for a long time, that was a totally accretive deal, right? I mean, I would say
TNT was a more international.
TNT was but it was a driver for FedEx. It was a driver for the multiple, and it was a very important trade, I think, for until it wasn't. Now it looks like that Europe's the big problem, and the air freight internationally is a big problem, and that maybe they're not integrating as well. But sorry, I didn't mean to cut you off.
I think the slowdown hurt, but I think that the integration of TNT, the pricing, I think that's been a disaster, a huge distraction for management as well. I mean, a lot of things have gone.
Let me flip it. Karen, you said, okay, you've owned it for a long time. You've been honest about that. And you said you're ready to throw in the towel. At what point, though? I mean, this is FedEx. There's sort of a duopoly in delivery. I mean, I know Amazon's going.
There's not. That's the thing.
Well, it is evolving to, people are going, individuals are now delivering boxes for Amazon. But Amazon didn't even really exist in this market 10 years ago, 15 years ago. FedEx has been around since, I think, 1971 is when Fred Smith, or right around there, founded it. At what point does it get so cheap you go, you know what? It may not be run that great, but the valuation and the fact that it's clearly not going away will make it a deal.
Well, I thought that yesterday. If you go out long, it's the same as buying it at that price. So at 164, wherever it was yesterday, 166 this morning, I thought all of that was in there. And yet, that turns out to not be the case. It is not a duopoly anymore at all. And you have the post office, you have Amazon, and that's not going away. That's only going to be.
When you're throwing in the post office, I don't know the post viable competitor.
Yeah.
So when we talk about FedEx, though, really the biggest issue for this company, I think, if you want to own the stock here, would be the global economy. In other words, if you have a view on the global economy that's not bullish, and take away FedEx out of the transports, and if you follow the transports by the ETF, which is the IYT, of which FedEx is about 9%, the IYT arguably is about to break out. If not for FedEx, would be breaking out, would be totally in concert with the other parts of the market that we wanted to see. And so I know you want to talk about Navistar. I know you want to talk about the broader read, and you may be right. I'm not telling you the world's a great place. But what we are seeing is that the rails and the airlines are all in actually a very decent place, both in terms of their business and their charts.
Well, let me make one point. So FedEx was a company that took a lot of heat in November. Remember, that they cut their tax bill to zero in 2018? Remember the New York Times story? And they caught a lot of heat about that. They had this lobbying effort to get their own tax bill. So what happened? You just mentioned that 275 number. You know where that came? January 2018. That's when all the enthusiasm was in the market, was in individual stocks about this tax cut. And what happened since then? The stock has literally been going the upper left to the bottom right ever since then. So tax cuts can mask a lot of bad things going on with the company only for so long. And then what happens is, what do they say when the tides come out or something like that?
Not wearing a bathing suit.
Right. So here,
Who's not wearing a bathing suit?
FedEx.
Oh,
Yeah, well, there you go.
Yikes.
I'm not, it's a family show here.
Ouch.
But I guess the point is like, even with the benefit in 2018, the slowing global economy, the trade war, it did its number. The company obviously has their own issues, and they have secular issues with Amazon.
Yeah, and FedEx is now Karen's ex because she's throwing in the towel.
Oh, one more thing
divorcing the
that
stock.
was clever. But I do, there is in a year where a lot of things went right to take a tax loss. I could buy it back in 31 days and revisit.
Well, if you do, let us know.
Okay.
Because we hope to see you again. I don't know if you'll see FedEx again.